Good afternoon, it's Brian Shannon from AlphaTrends.net. Today is Monday, the 30th of August, 2010, and let's take a look at this S&P 500, which continues to be very sick the way it trades. We've got a pattern, a clear pattern here recently of lower highs and lower lows below a declining 10, 20, and 50-day moving average. We've seen that this support at the prior support at 107 was broken and has now acted as resistance along with that declining 10-day moving average. You're going to hear all week that volume is light. That's because we've got a holiday coming up this Monday. But we still have the possibility that this market could find some volume on a fearful breakdown. We've hammered away at the bottom end of this. What's really been the range is 104.5 basically to 113. Again, taking out these few days, but we've been hammering away at the bottom end of this support, and it seems as though it's more likely to fail here, and that we're likely to get a test of at least the 101.5-ish area. You look at the weekly time frame, and we've observed numerous times the Fibonacci on here and how that 101 area is the 38.2% retracement of the lows from March of 2009 up to the highs we've seen this year. So I think we get another test of that. It's likely that we're going to continue to work our way lower, maybe towards the 50% retracement. That's the bigger picture. On the shorter term time frame, though, of course, today we started out with just a little bit of weakness here. It tried to rally, and then what we had instead was the market broke back down below the daily volume weighted average price. That volume weighted average price then acted as resistance here, and it really deteriorated right up to the end of the day. So we closed right on the lows, and this is a 1-minute chart, by the way. As far as looking at the 10-minute time frame, or let's actually look at the 30-minute time frame. This is the 107 level. We've been looking at that as the potential resistance level. Well, it has acted as resistance. It's going to take this market to get back up through that 107 before can become even more neutral. And just looking at the trend line there and looking at some of the other markets, the financials for instance, they remain in awful condition, just terribly weak here, down at the bottom end of the range. The semiconductors were down 2.7% today. They've, of course, broken this range and stayed below it. So we're testing lows for the year right now, and the weekly time frames continue to give us no reason to be confident that this market can turn around. What's going to turn this around is anyone's guess right now, but these markets are in clear downtrends, and they should be avoided from the long side. There are, of course, going to be individual stock names that do work from time to time here. Some of the little solar plays like SOL, I was mentioning this today, looks real nice on the weekly time frame. SOLF, SOLR, but these are longer term trends, and if this market really does break down here, and if we start to get some heavier volume, which again is a real possibility that we could see that volume ahead of the holiday, because the market likes to do what people don't expect, and most people are expecting that we'll have, I think, maybe drifting lower a little bit on light volume, but we might see panic this week. So keep it in mind and be very defensive in these markets.